Hello and welcome to Your Hometown Solutions. I'm your host, Jean Newell with Waterview Realty, and we're here with our special guest, Carolyn Wolf from Certified Mortgage Planners. Hello, Carolyn.
Hello, Jean. Pleasure to be here.
We're here to discuss everything real estate from foreclosures to Feng Shui, and today we're going to feature our special theme is everything you need to know about mortgages. So it's Mortgage 101. So get out your pencils and paper and write down all these facts and phone numbers of different companies that we recommend and so forth, so you're prepared. So when you're out there shopping for a home, you have all the answers right there in front of you. So Carolyn, before we go any further, I know you have to disclose your NMLS number. Is that correct?
Yes, thank you, Jean. It
is official.
Yeah, it's Carolyn Wolf, and I work for Certified Mortgage Planners, and my license number is 268538.
And Carolyn, go ahead and give out your information on how someone can contact you today.
Okay, by email, it's Carolyn@floridalendingpro.com. Or they can always reach me on my cell phone, which is the best and direct line. It's 321-795-9103. And we do have a website as well, and that is www.floridalendingpro.com.
We'll be giving out that information several times during this show because we want to discuss what you need to do before you start looking for homes. First of all, Carolyn, thanks again for joining me. You've been a wealth of information over the past 6-8 months that we've been on the air. And we always talk about what's the difference between a banker and a broker. So let's go into that.
Okay, that's a great question, Jean. There is a big difference between working with the banker versus a broker. When you go to a bank, you are working with that one particular specific bank. We all have specific guidelines that we have to adhere to, whether it's for a conventional loan, FHA loan, or a VA loan. However, each individual bank has the ability to add on their own specific extra guidelines. So sometimes you might think you go to your bank and they might turn you down for one reason or another, and you're thinking that nobody else can actually do your loan for you, and that's not necessarily the case, because there might be another lender down the road that doesn't have that certain extra stipulation or guideline added on. So with a broker, you have the ability to work with multiple lenders. So if I have a borrower that doesn't quite fit in one box, we have other boxes that they could probably get a loan through.
So let me explain that a little bit more. So you walk into your First National Bank. I don't think there's a First National Bank out anymore, so we'll use them as an example. And there's a loan officer sitting there, or just a bank officer, and they handle the money markets, they handle the opening up checking accounts, they handle the commercial loans, everything. And they also have some mortgages, but they're not in the business to make money on mortgages. They're there as a full service bank for checking accounts and everything.
Right.
So a bank is set up a little differently. They have, as you said, FHA and VA, and that's a lot of people don't understand is most banks, probably 95% of them, banks as well as independent lenders, don't keep their mortgages in-house. They sell them.
That's correct.
So that's why FHA and VA, you would assume you're going to get the same loan whether you go to your First National Bank or you go to a private lender or you go to a mortgage lender. But it's a loan that gets sold back to the feds, right?
Well, or in some cases, it actually gets sold to the secondary market. So it would be a bigger investor that actually buys the bulk or in bundles.
So when you said that the First National Bank might decide, well, here's the guidelines on FHA, but I'm going to add a couple different things.
Right.
And why do you think they do that? Why do they add more things on there?
They decide on their own which risks they want to take. And there's two really big ones that people will add on. Typically, most lenders are going to have a credit score minimum. Some will have a 580, some will have 620, or some will have a 640. So that's one of the biggest ones. And then same with VA. So VA doesn't really have a credit score guideline. However, some lenders always put a minimum credit score that they want to adhere. And the other big one is some FHA lenders are going to require people to show proof of their rent history in the past, and not all of them do that. So there are little nuances.
Do you think that's because if they're going to go to the trouble of doing it, they want to make sure they can sell it to the secondary market or something? Or so bottom line is there's lots of different scenarios out there, but a broker is like any other kind of an insurance broker, any other kind of a broker. You are not limited to just what you have in your portfolio, to like a bank would. You can actually go out there and shop the various. You might shop
shop
couple
for the consumer,
dozen places.
Exactly.
Now, what I like and what has seemed to prove prudent is if you were not aware of this, and you were out there, you might stop at the First National Bank, and then you might go to ABC Bank, and you might be shopping loans. And every time you go into a bank, they're going to require you to pull credit. They're going to pull your credit. And it may or may not ding your credit history when you're doing that. When you go to a person like Carolyn Wolf, who is a broker, she pulls your credit one time. How much does that cost to pull the credit?
It varies. It depends if it's a joint credit report or an individual or married couple, not married. But it can get up to about $90, but as little as $20.
Okay. So you pull the credit once. The important thing is you pull it once, and then you shop the various banks, the various private lenders, the secondary market with that one credit report.
Correct.
So you don't have to keep filling out credit reports. So that's one of the major reasons you want a broker. The other reason is a lot of times the brokers I've found have money available to them that is not readily available to a bank. It might be, I always call it's the backdoor policies, where it's more like wholesale money. You can go in and get things at sometimes a reduced rate because you're a broker and you're going in a different door to that same bank. So you might walk in the front door as an individual to the First National Bank and get turned down, but you go into Carolyn and she might be able to see a way to get that loan at even a better rate coming in the back door of the First National Bank. It sounds a little strange, but it's very interesting to know that you have a broker out there finding the best situation.
Correct.
So we've covered that. You want a broker. And Carolyn Wolf with Certified Mortgage Planners. Do you think we should just go ahead and give out your MLS number again? What the heck?
Sure. That number is 268-538. Thanks, Jean.
That's kind of like your license number, isn't it?
It is, yeah.
That's so you can
the National
officially
Mortgage
talk.
Licensing System.
Right.
License number.
They won't let you talk unless you give out that number.
Right.
And that's Carolyn Wolf. And give out your phone number and email one more time because I know people are going to want to write this down as we get into some more information.
Okay. My phone number is area code 321-795-9103. And my email is Carolyn, CAROLYN, at FloridaLendingPro.com.
The next subject we're going to talk about is the importance of being pre-qualified or pre-approved and the difference between those two scenarios. So tell us the definition, Carolyn, for pre-qualified and pre-approved. They sound like they might be the same thing, but they're different.
They are different. That's a great question, Jean. Okay, so when somebody's getting pre-qualified, we are basically, the majority of people, and everybody does do it a little bit differently, but what we do is we take a completed loan application, we run credit, and we also do have an interview. It usually lasts about a half an hour asking certain questions. And then once we pull the credit and we cross-check the numbers based on what the client is telling us, we can issue what's called a pre-qualification, and we can run it through our automated underwriting system based on the information given verbally, and it will give us an approval or not. With a pre-approved, you have provided pretty much all of your documentation as well. So your tax returns, your pay stubs, your W-2s, your bank statements, the credit report, and we have sent it to an underwriter to actually sign off on that particular loan. Most of the time, we're going to do the pre-approvals when maybe we're right there on that edge and we want to make darn sure they're approved before they go in and find their dream home. So we want to, make absolutely sure that they're good to go.
So pre-qualifying is you can do that on the phone. They tell you various numbers, how much they make, what their debt is, and you pretty well do that on the phone.
Correct.
The pre-approval is when they actually bring all the documentation that's going to be required anyway at some point in time, and they bring all that to you. It goes to the underwriters, and they said, yes, you're pre-approved, you're ready to go for a $200,000 loan or whatever it is.
Correct.
So how long after they pre-approve, how long does that last? Is that only like 30 days or 60 days?
They're actually good for 90 days.
Okay.
And generally what happens at that point, what we do is we just have a conversation to find out if anything's changed. Has your income changed? Has any of your assets changed dramatically? If not, the only thing we're going to do is we're going to repull the credit, which does not affect the credit score. It actually gets recasted after 90 days.
That sounds great. Mm-hmm. And I wanted to make sure that people understood that because we want to tell you how to go about being pre-qualified or pre-approved, because here's a scenario that happened just this weekend, and someone lost out on their dream home because they couldn't compete with the other offers. And to give you an example, we had a big open house, and we had about, I couldn't even tell you how many, 35 to 40 people came through in 2 days. And it was listed on Friday morning, and we already had like 8 offers by last night. And the real estate agents that brought in the offers, some know how to do this properly because they've been in the business a long time. So that's another plug for finding a professional.
Like Jean.
Well, thank you, Carolyn. But finding a professional that knows how to do this properly, because it's like anything else. If you go into something unprepared, then you may or may not be in the winning seat. So here's what happened. We had some people were bidding, and it actually their offers became higher and higher over the ask price for the home, the price listed on the home. So some of them were up to $10,000 over the ask. And normally you would think, oh, I'd take the highest priced one. But because that was a loan, and it was going to be a loan, and they did not have their pre-approval letter, they was a little sketchy on their pre-qualified. And we had another one that was less than $10,000 over, but it was cash. So the person said, why, I don't even know if this person's going to be able to get a loan. And even though it was tempting to have a higher price, the cash one won out. So you have to be prepared, because you're going in there as almost like a package. You're going in there as a buyer with a pre-qualified and everything, because your house, when you get a loan, your house has to get qualified as well as you. So you have to be, have to know about appraisals and so forth. And we're going to talk a lot about that in future shows. But bottom line is you have to go in there looking your best on paper.
Correct.
So if it's between you and someone else and you look like you're ready to go, there's not going to be any questionable things about your pre-approval or pre-qualified. That sometimes can trump cash, and cash usually is the power player. But if you've got your right paperwork, you can take those homes that you got the best offer in there. So that's one of the reasons why we want to talk about having that pre-qualified or pre-approval letter. So the difference is when someone calls you, we've talked about this again on other shows, we always recommend before you go out there and look at homes with a real estate agent or even on your own, you want to talk to someone like Carolyn so that you know exactly what you're going to be able to afford and what you're going to be able to get through on a contract, because your contracts are all going to be stipulant on getting a mortgage. And if you can't get one and you've taken that off the market, that's not a good thing for anyone involved. So let's talk about when someone calls you, you kind of recommend that they call you 3 or 6 months out before they really are ready to shop.
Absolutely.
And some of the reasons for that, Carolyn, tell us some of the reasons why they want to even go that far out before they start looking at homes.
Okay. One of the biggest reasons that it's a great idea is checking that credit, because sometimes we don't always know how well our credit is, or there could be something that has popped up that's not theirs that we need to take the time to clear up. And it's not